Okay everyone, we are back on The Absolute Reality with a fresh new video, and today's topic is one of my most favorite topics of all times, and this is a topic which has been requested to me by many of the viewers who have watched the previous videos. So without delay, let's get started with one of our most favorite topics: how to buy my first investment property. So buying an investment property, first of all, is very different than buying a primary home, where primary home is more about emotions, family preferences, etc. Buying an investment property is all about numbers. So every investor would have a different process that they follow. I have tried to keep it simple, and I have tried to summarize it in just 4 steps. Now, each of these steps can be a different video in itself because there's so much detail and there's so many different ways to achieve that particular step or stage and move on to the next one. But I'll try to briefly touch upon all these 4 steps or 4 stages of buying an investment property, and hopefully you get something out of this video that motivates you to go buy your first investment property. So let's get started with step 1. Step 1: decide your criteria. As you can see, I've noted down a few bullet points here in deciding your criteria. First of all is the price point. Some people would like to start with an investment property worth 100K, some 500K, some 1 million. Now you can say that you can easily say that 100K properties don't exist in your area. Well, then go look for a different area. But yes, decide your price point and also decide your down payment. Typically, for an investment property with a conventional loan, you need to put down 25%. So that's the minimum. But if you want to put down more down payment, then that could help bring up your price point, or that could help the next thing that's called cash flow. Now, different people, or at least for the people who are new to investing, they might have a different understanding of cash flow. But cash flow, in the simplest terms, would mean the income that the investment property generates minus the expenses that the rental or the investment property incurs in a month is your cash flow, or it's the net amount of money you make or you pay after you've deducted all the expenses from the income that the rental property or the investment property generates in a month. Now, some people could say, I need $100 positive cash flow. Some people say, I'm okay if the property cash flow is negative $100, $200, $500, doesn't matter to me. And some people say, I would at least want to break even. So amongst all these three, you come up with your criteria, like what's the price point I want to buy the property at, and how much down payment I'm going to make, and what's the cash flow I'm looking at. Now also notice, if you're looking for a property with a price point of 100, if let's say let's say you have 50K on you and you say I can make 50K as down payment, and you have a price point that you're looking for is 100K, which means you're making 50% down payment. Your property is going to mostly cash flow very nicely in that case. However, if you are only looking to do a 25% down payment, then your price point could be higher, which might make your cash flow, which might make it difficult for you to cash flow positive because your monthly mortgage and other expenses would be higher. And then, do you want to hire a property manager or not? Again, different people have different opinion about this, and this could be another video in itself. But at this point, when I say decide your criteria, property manager, we are looking at it as additional cost. Another thing to mention in deciding your criteria is you can use various kind of rental property calculators available online for free. I personally use calculator.net's rental property calculator. I've put the link to the calculator below in the description of the video. But let's go to the next step, which is focus on an area. Now, once you decide your criteria, which is all about numbers, you need to focus on an area which would satisfy those numbers. Now, why you want to focus on an area? Because you want to get very comfortable looking at the properties in that area and the kind of neighborhoods that you would want your rental property be in. Now, it also focusing on an area is also important because even though within a state the base property tax is pretty much similar wherever you go, there's always special assessments in certain areas, and also other things like Melrose, etc. could add on. I know I'm throwing a lot of terms at you guys, but you could easily look them up online and they're very simple to understand. So focus on an area so you can find out what's the prevailing property tax in that area, what are the rent rolls, like how much a particular size of property would rent for, and what's the rentability, like what's the likelihood of getting the property rented and how soon, and what's the general interest amongst general public for renting in that area. So all this would really help you understand the rental dynamics of that area and help you feel more confident in investing in that area. Let's move on to step 3. Another tip here, to focus on an area, you can look up the rent rolls on various websites available. I personally use Rentometer. It provides you, I think in the free version, it provides you up to getting an estimate on up to 5 properties, but I use the premium paid version, which is about 50 to 100 bucks a year. Very reasonable, and you can analyze a bunch of properties, and you can also run reports on particular areas for the existing rent rolls. If you don't want to use that, you can also use the free rental estimator from Zillow. Again, I'll be putting all the links down in the description so you don't have to search online. You're welcome. All right, moving on to step 3, getting pre-approved. Now, people have different perception when it comes to getting pre-approved. I'm not a lender, I'm not a finance person, but I'm going to give you a brief description of 2 of the most common kinds of pre-approvals that exist out there in the market. So first of them is called pre-qualification. A pre-qualification is a very basic letter issued to you by a lender where they just look at your financials and just give you a letter based on what they think you could afford as a mortgage on an investment property. The other is an underwriter pre-approval. Now, this is a much more in-depth analysis of your financial situation, and this is basically an underwriter who's employed by the lender performs a risk assessment on your financial profile, like how many assets you have, how many liabilities you have, what's the kind of income you have coming in every month, and based on that they give you a pre-approval letter which says that you're approved for this much loan amount on an investment property at about this much of interest rate. Now, another interesting point to note here, which not many people might know, is the interest on a rental or an investment property is always much higher as compared to your primary home. So when you are deciding your criteria, focusing on area, getting pre-approved and doing all that stuff, do take that into consideration because it's going to have a bearing on your overall expenses once you end up buying the investment property. Again, this underwritten pre-approval letter has much more weightage when you go out there making offers than a pre-qualification letter. But if you cannot get that and you want to move fast making an offer on an investment property, having something is better than having nothing. So go get your pre-approval soon. All right, so we are at the final step of buying an investment property, and which is, and I cannot stress enough, so I wrote it in all caps, make offers. Guess how many properties you would end up buying if you never make an offer? 0, right? So go ahead and make those offers. You have done your research, you have your criteria, you know the area that you want to buy in, you are pre-approved, so have confidence in your research and go and make offers. Making an offer doesn't cost you anything, but you will learn a lot. You will learn about whether the property has multiple offers or not. You will also learn about what are the kind of conditions or contingencies people are putting when making the offers or not. You also know what are the kind of offers that people or the sellers are expecting on these properties. And to make this process smooth for you, I would highly, highly suggest partner with an agent, a smart agent like me, of course, who has experience not just buying and selling primary home, but also buying and selling investment properties. Because as we mentioned multiple times in this video, buying an investment property is a very different process than buying a primary home. Now these numbers, if you see, interestingly, I have not covered appreciation of the property anywhere. When we buy an investment property, the appreciation is icing on the cake. It's the cherry on the top. If you get appreciation, it's an added bonus. But even if you don't get the appreciation, we are depending on these numbers that we have already calculated when we are placing the offer. So these numbers not going to change. One number that will definitely change is your rent, because the rent's going to keep going up with time in most of the scenarios, which always will help you in future increase your cash flow. So let's say even right now you have like a small negative cash flow, but you can sustain it over the years. That negative cash flow is not going to remain the same. Once your rent increases, that negative cash flow might start breaking even, and eventually it start turning into a positive cash flow. So as long as you can sustain those numbers, you like the area, and you're comfortable with the financials, go ahead and buy that investment property, guys. And in addition to that, if your property appreciates over time, your investment is going to give you multiple returns. So I hope I was able to explain this entire process. Again, as I said, each of these steps can be a different video on its own, because there's so much that goes on here. There's so many different ways to achieve all these steps. But this is the basic framework that will help you buy your first investment property. So what are you waiting for? You can buy investment property in any market as long as you have done your proper research. So go ahead and get that first investment property and keep tuning into the Absolute Realty for more videos. Thank you.